Well, that was kind of an unexpected start to the week with inflation and Powell, the main focus. Didn't expect to start by talking about Roaring Kitty and memes, doing forensic meme analysis. My gut tells me it's the wrong place, wrong time for a pickup in the meme trade, buying up the businesses that are lighting money on fire with negative cash flows to the extreme in AMC and GameStop. But there's a possibility here that we might look back at the end of this week and see it makes sense if inflation comes in light and we get a rip-roaring animal spirits comeback. However, I'm not convinced that's the most likely outcome still. I got the yellow light on stocks this week. We got a lot of yellow lights on here because technically I think a lot is still up here for grabs. The high momentum trade struggled today. Chips weren't really in the mix. The meme trade coming out of nowhere seems a little bit misplaced when it stems from particularly one, a tweet from a guy, but then also two, no macro support for it. See, what was so revelatory and incredible about the meme trades now almost 4 years ago, which is pretty crazy to think about, was that the backdrop in the economy was basically what was to thank for it. Yes, Keith Gill and the community of traders online pumped the thing up and most got burned, but it was the underlying economic situation that provided the fertile ground for it. Stimulus, a lot of discretionary income. We've seen these things wane. We have seen the economy soften in the last 2 weeks. It's a weird timing to suddenly think people are going to start speculating in this manner again. But anything's possible if the data go our way this week. I'm looking at a few things. Number one, I'm watching Bitcoin. I still think that when it comes to telling you which way speculative winds are blowing, Bitcoin's the most reliable. And so it makes sense that today BTC was up when we had the meme trade come back on. These are high beta trades. They swing a lot. But generally speaking, Bitcoin's still been softening. Lower lows, lower highs. If we are going to see a pickup in speculative behavior, meme style trading, then Bitcoin's not going to get left behind. I don't think it ever really does. It needs to get above 66. That's at least the last piece of the April chart. If we can get BTC through there, get it trading into 67, then you've got another piece of information maybe that tells us it's possible to get some of this speculative fervor back. But just remember the long-term charts for GameStop, AMC. Be careful out there. Even though some individuals have been able to make big money on these trades, the vast majority of people haven't. That's why the stocks have gotten killed. The long term for GameStop looks ugly despite how good the 1 year looks now because of this giant candle. Now, the trading gets crazy. Obviously, options folks are going to love it, have a great time. But don't forget that long term, this thing was all the way back into single digits just a couple weeks ago. So, all right, that's kind of the response to the surprise meme trade. The core of what happens this week is going to be around bonds. It's going to be around the dollar. It's going to be if inflation comes in light or if Powell sounds soft, or if he sounds like he's worried about the economic data weakening too much, like maybe he needs to give us a cut to help us. That's what's going to ultimately drive the bus. But if inflation comes in light, we've already seen heaviness in the dollar. We've seen heaviness in the 10-year. If you see us trading back into the April lows, if we break through to the downside for the 10-year below that 445 and the dollar below 104.7-ish, then yeah, anything seems possible again, the least of which could be stocks making all-time highs. We are so close, but make no mistake, the highlight is inflation.